Welcome to this week's Swarf and Chips. A huge weekend ahead of us as well, because this weekend is the FA Cup final.
Come on, Chelsea.
Royal wedding.
Oh yeah, the royal wedding.
And the royal wedding, yeah.
Sun shining.
Some barbecues out, wine tasting.
Street parties. Don't you think weddings always cost a lot of money though?
Not as much as divorces.
That's why I haven't got married.
Speaking from experience.
Okay. But also a really, really big event coming up, of course, is our Swarf and Chips finance show.
Wow.
Well,
Everybody needs money.
But what can we learn?
Well,
You can't count. You can't count. So
you've got loads of money.
I haven't got it.
You haven't got any. So, yeah,
But
what
this is
to
the
lose?
thing, finance is something that often people go, about, but the show is going to be incredible because most manufacturers need finance when they're buying machine tools. A lot of manufacturers don't know enough about finance when buying machine tools, and actually they're not making the most of finance. So this show is definitely one to watch.
Is it free money?
Monopoly
Not quite.
money? Monopoly money?
Not quite. So today, Colin and myself are joined by Paul Cox from Asset Finance Solutions. Now, finance is often a daunting topic, but today we're going to make it fun, aren't we, Colin? Well, with you. Fun?
Oh, Lynn, you just start the show and you're already having a dig.
Yeah, well, you're just easy.
It'll make it simple, easy to understand.
Simple, easy to understand, because it is. Why is finance such a daunting topic, Paul?
I think most people really don't understand finance properly. It shouldn't be a daunting subject. At the end of the day, you have a need for funding, and I'm here to provide that need for funding. You go to the funder with obviously the requirements that they want, and then hopefully then provide you the money. So it is a very simple, straightforward process.
Way of thinking.
So you're here to take the pain out of it all.
We are here to take the pain out of it, yes.
Now keep watching, because we're going to do a little bit of role play later.
Excellent.
So we're going to
Looking forward to that.
He's looking forward to it. Colin's going to be a little bit of a tricky customer, and also we're going to be discussing the journey of finance. So keep watching, because this is something that pretty much most, would you agree, most manufacturing companies require.
Definitely.
Yes.
Definitely.
Okay, so what is it, the types of lending, what is it, let's start off with, what is it people require finance for in this industry?
So most people want financing for, obvious one is going to be machinery. They'll want to do their tooling. So it's really growing their business. So assets to actually help grow their business.
So I'm thinking finance, machine tools, absolutely. But you said they're tooling, software, anything in the machine shop, really?
Yeah, so effectively, if you work under what we call a DIMS policy, so durable, identifiable, movable and saleable, if you can pick it up and move it, we will fund it.
But what about software?
Software is an anomaly, but nowadays there's a lot more businesses actually are involved in software. So the funders have actually caught up and said this is a valuable part of your business, so we need to be looking at it, and software can run into the tens of thousands. So a lot of companies now will look at software as an asset for the business. They will fund that software.
I think key to this whole show as well is the fact, you know what, I don't know if they'll fund it, pick up the phone to you, Paul, simple as that, and you'll say yes, no or maybe.
Yeah, indeed, you'll be surprised at what we can fund.
Okay.
And why choose you, Paul? Because, okay, there's different companies, there's different banks. People can actually go directly to a bank. So what's so good about you?
I think you alluded to it earlier on. Finance is quite daunting, and I'd like to think I'm not a daunting person.
Well, no.
So yeah, it's about understanding your customer, going into your customer, understanding their needs, and then coming up with what I call an adult solution to their problem. So from my perspective, I've got a lot of years of experience in the banking industry. I'm now working in the broker industry, and I have a genuine passion and interest in your business.
I think another key thing is customers have got their own bank, so they go to them, they'll get one quote. But engineers, if you're buying a new machine, for example, you'll probably look at 2 or 3 machines. So do you want to look at 2 or 3 different finance companies? No, you don't. So you go to Paul, who will deal with it all, and you've got, how many funders can you go to?
Well, we've got a panel of over 65 funders. So that's a lot of funders to have a look at.
And these people will naturally have a different appetite for a company, won't they? They'll
definitely
have different appetites. One funder will go for one might not. Higher deposits, lower deposits, different products.
So we have tiers of funder, so tier 1, 2 and 3 funders. Tier 1 funders are your high street banks. They're quite rigid in their policy. So if you go there, do you have a good relationship with them? Probably not. And if you don't fit their policy, there's every chance that you won't get that funding for your bit of machinery. But we deal with a lot of specialist funders and actually niche funders to actually I hate the word in a lot of ways to say tailor, but that's exactly what we do. We find out your needs, we find a product that the fund is actually comfortable with, and they want to work with you to get you the money, but not just for that deal, going forward as in a relationship type
You kind
scenario.
of reminds me a little bit of, you know, these adverts that are on TV for hotels, and they're the ones that kind of take out all the hard work.
Exactly.
And you're just basically saying, this is what I want, and you're there going round doing what you can do best, finding the best product for the customer, and done.
It's a little bit of the duck syndrome. On the top it's nice and smooth, underneath I'm running around.
You're like a swan.
Yeah.
Right, okay, let's start here. Types of lending. What are the products that you can provide? This is so important for so many people because, again, this benefits people in different ways.
There's a lot of products out there, but briefly, the headline products will be a hire purchase deal. Hire purchase, very straightforward. You will actually loan money against a bit of equipment. At the end of that term, 3, 4, 5 years, you will own that piece of equipment, no further payments. Leasing is a very popular one as well. So if you have a particular contract for X amount of years, you've actually got a contract on board that's worth, I don't know, several £100,000, but you haven't got the equipment for that. You want to buy in a piece of equipment. We can lease a bit of equipment for you, or give you the funding to lease a bit of equipment. And at the end of the term, you've got options in terms of keeping it, handing it back, selling it on. So that's the
I
leasing
think with
side.
that though, you'll provide the options. You need to speak to your accountant in terms of, because they all have different implications for tax and things like that.
Yeah, I always advise when in the meeting that you have a conversation with your accountant, because I don't know your business in terms of how you run your tax. So it's a conversation you would need to have.
Yeah,
Yeah.
okay.
Yeah.
But you can come up with, again, different options.
Most definitely, yes. There are a lot of different options in terms of the leasing side.
Yeah.
Refinance, I've put refinance in because it may be that you've got a piece of equipment already, say a larger piece of equipment that a few years old, you want a smaller piece of equipment, but you want to release capital, actually out the bigger piece of equipment to buy some smaller bits of equipment, tooling. Refinance is one that's a very popular option, and most lenders will look at refinancing deals now.
Another example, I suppose, is if you've got a machine shop full of machines, they're all paid off, business is going really well. As we all know, cash is running out because you're spending it on stock and things like that. So you need to just release some cash. You'll look at that whole suite of machines and provide some finance on that.
Most definitely. I mean, cash flow is one of the biggest reasons for sort of refinancing. It injects a bit of a cash back into the business so you can do really what you want with it, but you haven't effectively taken on any other assets in there. You've actually utilised the equity in your own kit.
Yeah. And that's not implying the business is not performing well, it's implying that business is performing well because your cash is tied up with your staff and your stock and things like that.
And that's why a lot more funders will look at it. It's a very popular option now. They understand that.
Okay, last one.
Commercial loans. Well, commercial loans can cover a number of things. We talked earlier on about what I call the DIMS policy. So things like intangibles, so software you mentioned, and it could be things like tooling or smaller items that individually you couldn't fund, but collectively you can fund. So it may be that you want to sort of pull a number of things together and put it under a commercial loan.
What about your property? Some people might be, maybe expanding property or something. How does that work?
We find this quite often that a number of businesses that they are expanding, or they've taken on a number of different contracts and they just don't have the space. So they're looking to a bigger unit, or they've been in a unit for quite some time and they want to buy the unit themselves.
Yeah.
So put assets back into the business.
It's a great opportunity as well.
It very much so, yeah.
You're paying your landlord X £1,000s a year in rent. If you can get the deposit on the property, that repayment on the property loan can be similar to what you're paying a lease.
Yeah.
So it makes sense.
And going forward, it's very good to have property in a business anyway. Funders actually like that. It's a bit of security, not offered up as security, but it tells them that there's longevity with the business.
Right.
Now, another question. We're going to talk about the journey. So basically, where you would start and then the whole process, just kind of simplifying the whole situation for you. And don't forget the little bit of role play. Another question for you,
Looking
though.
forward to it.
I know you are. You really are, aren't you? We haven't got any costume or anything. Second-hand machinery, that might be a question that comes up a lot because, yes, okay, you think, they'll lend against something that's sparkling brand new, but what about something that's second-hand?
You'll be
used?
surprised how many used machines are financed. So again, it all depends on the funder. Some funders like just to do new machines. Generally speaking, anything up to sort of 3 to 5 years, most funders will look at. Once it goes beyond that, the risk of the funding gets a little bit greater. But that's not a problem to a lot of the funders. We've got 65 on our panel. So all funders will look at it. It's really about the strength of the business. So the risk really, yes, it's in the asset, but there's also affordability for the business.
Another thing as well though, people say, I can't afford a brand new machine, I'm going to have to buy a second-hand machine, but depending on the way you structure it, those repayments can be similar in
yeah, sometimes it actually benefits to get a newer machine, because we can structure the payments around your needs and your buying needs and of the business. We can put back-end residual values on the machine to keep the actual monthly capital, monthly repayments down as well. Okay. So there's a number of ways that we can tailor tailor a deal around to the customer.
Again, reiterate, basically get on the phone to you.
Get on the phone to me. Indeed, indeed.
Right. The journey. Need the clip. There we go.
It works.
Thank you to our editors. Right, okay, so the journey of lending. Talk us through this, please.
Again, you said earlier on, finance is daunting. I don't think it's daunting at all. It's very straightforward. You make an inquiry because you have a need.
So you made a decision, I'm going to buy a machine tool, software tooling, etc. Ready to go. Right, oh, actually I need to fund it. Straight up to you.
Yeah, indeed. Or you may not 100% know exactly what it is. You have a need and you want to talk it through with somebody like
true.
myself.
You might not have already chosen. Maybe you're thinking, I don't know what I can afford.
Yeah.
So
very much so.
Yeah.
Very much so.
So then you have a little conversation with yourself.
So very much so. I take the inquiry, I have a chat about the individual and the business and where it is, and I'll sort of ascertain what their requirements and needs are. I'm formulating opinion as we go along, in effect. Yeah. So it's a very open conversation, just like we're having now. Yep. I need to know about your business. I want to know about your business.
Yes.
So that's the sort of second stage.
Key as well there is knowing about your business, building that relationship as well.
Very much so. Yeah, okay. Yeah, very much so. The funders will want that. They expect that I have an understanding of your business. So this is all part of the process. Yeah. Going on from there, so in terms of the hard copy stuff we need, it's very basic. It's accounts, your trading accounts, bank statements, and we'll always do a credit search. So they have to understand what's in the background.
Yes.
Okay.
Basically 3 pieces of information, and you're not completed, but you're off and running.
Very much so. In a lot of cases, that's all we need to actually get the deal through. Credit search is up there. I will say, don't be daunted about the credit search. Doesn't matter what's in your background. Be honest with me, because if I don't have all the information, I can't then come up with the right solution for you. And if it's bad, tell me. I need to know.
Yeah, because like we said, different people have different appetites, and then that will then follow on from the product that you get, so that's fine. There's
a lot of funders out there that would like a story. So we call it storybook lending. So the high street funders will be belt and braces, they want that. But there are a lot of funders out there that will actually understand that people have had hard times. You know, they don't always go along at 100% each year. So it really is about understanding that it's real world.
Yeah,
very much so, real world.
Quotation.
Yeah, so you want to know what you're going to be paying.
Yeah.
It's very, very simple. So you have a need, you have to take out a loan, and you want to know over what period of time, how many years those repayments are going to cost you and your business.
Different funders, different interest rate. Some of them will do different terms. So some might do 3 years, some might do 5 years.
Yeah, and there's a lot of anomalies with that in terms of term, the amount you're looking to borrow, the amount of deposit you're putting down, the risk of the business. But that's my job to do that and find that out for you. I go out and find a number of funders that can do it and the best deal that's right for your business.
Yeah, and then someone can then work out the hourly rate and et cetera, their end.
Yeah, indeed. I can provide the quotation. From there on in, the customer can then factor that back into their business and say, great, is this affordable?
I can, yeah. Next up.
Application submission. So once we've agreed on a quotation, or thereabouts with a quotation, they're indicative quotations. It's a submission to the funder. With this information, and obviously with the knowledge that I have through our initial inquiry and conversation.
The whole story.
Yeah, I put an application together. It's not rocket science. It's very straightforward. It helps me understand the key players of the business, what the business do, your key markets, your customers. That all gets packaged up off to the funder. So it's as simple as that. It's a very straightforward process.
They calculate.
So most cases we'll get approval through. Some cases they'll come back and ask for further information, but again, it's not onerous. So we don't know what that will be at that point in time, but nothing's onerous with these. And this process here can be as little as 24 hours.
Really?
Oh, blimey.
Yeah, so we can get approval in 24 hours. That can all...
Set yourself up there, Paul.
Yeah.
Everybody's heard that.
Yeah. So inquiry, conversation, bank statements can all happen on the same day. Quotation can happen on the same day. Application probably the same day or the following day. So within 48 hours, we can get a decision and an approval for your business.
There you go.
Okay.
Yeah.
Thank you. And the products that you've... Oh, we've kind of covered a lot of this anyway.
Yes,
so
indeed.
now...
But that's not the whole, I mean, basic, again, get on the phone to yourself, because what they think can't be funded, you might be able to provide a solution.
There are very few instances where we can't fund.
Okay.
It comes down to, if there is something sticky in the background, then affordability for the customer, but we can generally find a solution for you.
Right, we'll put all of your details on the bottom of the screen. Time for a little bit of role
Excellent,
play.
looking forward to this.
Lovely.
Right, okay then. So, Colin, tricky customer number
I've never
one.
been a tricky customer.
You're
Right.
a startup customer.
Startup, yeah. So I need a machine because I want to start trading. Can you get me some money?
What's your background then, Colin?
I've been engineering 25 years.
Fantastic.
I've decided to set up on my own, but I've only got 10%. Well, the machine's 100,000. I only got 10,000. Can you help me?
Yeah, we can do. Are you a tenant? Are you a homeowner?
Both.
You're both.
Oh, sorry. No, tenant in my business, homeowner, where I live. Yes.
So again, startups. Again, a lot more funders are on board with startups.
Okay.
So and they look at your background. So if you're a grocer coming into an engineering company, there's very little chance we're going to get you the funding, because
Fair
where's your background and experience?
Yeah.
You've got 20 years of experience. You've got something in the background. You're buying a nice asset, which is where the risk mostly sits, and you've got a little bit of deposit into the deal, so we can look at that. Funders for startups do like a little bit more. However, it doesn't mean to say you won't get the deal. And there are a number of funders out there that would look at, if you were looking to get a grant for your business, to input that in as cash into your business. A number of funders will actually appreciate that you're getting grant money, and they will happy to still do the business.
Now,
and you can recommend grants.
Yeah, so there are a number. So grants mostly are sort of industry specific or area specific. So enterprise partnerships.
Okay.
But there is something out there called EFG, Enterprise Finance Guarantee Scheme, which we're affiliated to. So that's effectively a pot of money from the government, which we potentially can use or put you in touch of to help you fund a piece of equipment with less risk, and if you have less deposit or security.
Okay,
so
you'll point me in the right direction for the grants, but you'll sort out funding.
Yes, indeed.
Excellent.
Yes.
Right. Next
Tricky
one.
customer number two.
Tricky.
Go on. You think of this one.
I've got a cracking new machine, but it's coming from overseas.
Okay, that's absolutely fine. So I think historically there's always been problems with the machines abroad, because who would want to fund a machine that's actually stuck in Germany? So you pay out £100,000 for a machine, it's still in Germany. So what we can do with that, we can fund it on a foreign invoice, so it could be a euro invoice, a dollar invoice, and we can do it into stage payments. So what you need to do is actually the machine needs to be ordered.
Right.
So you can do a stage payment to get it ordered and built. When the machine's completed, we can get it obviously looked at in terms of the machine is actually the supplier's workshop, and we can make the second payment.
Okay, so they make sure you're getting what you're paying
So the
for.
machine's actually built,
Okay, good.
And then the final payment can be made when the machine's actually shipped to the UK and sat in the customer's shop floor. So don't be daunted by that. So foreign supplier, stage payment, doesn't matter if it's abroad.
Okay, right. I've had a few. This is my next one. So next one, So basic imports, you could do that. All right. I've had a few tricky years, and my credit's not as good as it used to be. Can you help me?
Yes, we can. So again, we're very accommodating. So again, there are a number of players out there. So it's all about risk. So the funders will look at it. The high street boys are risk adverse. I'm not saying they won't do it, but they're risk adverse. So we do have funders further on down the line will do it. However, risk averse does predominantly mean you'll pay a little bit more for your bunts, but it doesn't mean you won't get it.
Okay.
So there is a deal there to be done. So if you've had CCJs in the background, defaults in the background, if you've been bankrupt, don't think you can't get the funding, because you can.
Right. Okay. Next one then.
Oh goodness, he's really enjoying this, isn't he?
I'm on fire here. So business is going really well, but I think we alluded to it earlier. All my cash is tied up in my stock and debtors and things like that. So I can only find a 10% deposit.
So again, it's accommodating. We can accommodate that.
Right.
So a low deposit doesn't necessarily mean you can't get a deal. We can do things like VAT deferments. So if you don't have enough cash, we can defer your VAT on the deposit payment for 3 months.
Okay.
So you can effectively get your VAT invoice, get the VAT back from the HMRC, and then once you've got that money in, then you can pay obviously the rest of the deposit, which is the VAT.
Brilliant.
Okay. We can do VAT only funding as well. So you don't necessarily need to put a 10% deposit down on the item. You can just pay the VAT as a deposit. You'll get that back in 3 months. Effectively, you've got 100% borrowing.
I've heard as well, can you defer the deposit over a certain period of time? So basically, the machine's sitting in your workshop, has been working, making you money for a few months. You've now got the money. Is that a similar situation?
Oh, like a repayment holiday?
Yes.
Yep.
Yeah, it's not strictly as that, but yeah, the repayment holiday is something you can do. So if you've taken on, I said earlier on, a new contract, but that contract's actually not going to realise any cash into your business for 3, 4, 5, even 6 months. What we can do is actually set up the deal. You probably pay your interest each month, but the capital repayments we can push back on a holiday for 6 months.
Simple.
And we could actually then obviously put a 6-month payment in for the longevity of the actual deal.
Don't be afraid of finance.
Not at all.
That's basically what you're saying. Don't be daunted by this.
There's always an option out there, but it's about picking up the phone and giving me the facts. I will ask all the questions for that, but give me the full story.
Right.
Okay.
Anything else?
Well, I think again, I'm going to reiterate. It's a simple solution. It's basically, if you're thinking of finance, pick up the phone to you and you'll deal with everything else.
Yeah.
Indeed. Yeah, very much so.
Build that relationship, get the information.
And I think that is the key. It's building the relationship.
Yep.
You know, as a customer, you need to be confident that I can do the business and deal for you and work in your best interests. And likewise, I'm your buffer to the funder.
Okay.
It's simple as that.
Thank you so much, Paul. I hope by watching you've learnt quite a lot as well, because that's what these shows are all about. And, you know, pick up the phone. That's all we can suggest. So thank you so much for today, Paul.
Thank you, Lindsay. Thank you, Colin.
See, I told you it would be interesting.
Well, in my day, when I came into the industry in the early 90s, a lot of
early 1800s.
Thank you. Yeah, during the war. They went to. They're saying, yeah, something like that. Yes.
Come on.
A lot of engineers, for instance, they would actually go to an OEM and say, look, I can make that for you, but give me the contract and then I'll buy the machine tool, how it has changed.
Definitely. Yeah.
And I think also it kind of highlights as well that engineers now are looking at finance packages when buying a machine, and that can dictate their choice of machine tool, and that's how important it's becoming.
Yeah, and I think the role play was fascinating as well, wasn't it? It was good to see Colin being put under a bit of pressure in various different scenarios, which I'm sure every engineer out there experiences. So there is, get in contact with the guys.
Okay, brilliant. Thank you. Next week we've got a great show lined up. We're at KL Engineering, TW Ward, and Ferocity. So trust me, it's going to be one to watch. Don't forget to like, comment, and subscribe. If you want to watch any previous episodes, click on the links here. And as we always say, keep those spindles turning.
And enjoy the cup final.
Yay!
Chelsea.
Wedding.
Arsenal.